All right, welcome back to this week's Breakout Watchlist from September 19th to the 23rd. In this video, I'll be covering the top 10 setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or strong volume patterns that lead uptrends. A big thanks to MarketSmith for sponsoring the video. MarketSmith is a trading research platform that we're going to be using to break down each of the setups. And listen, I know the market's terrible right now, but that doesn't mean we stop doing our homework. We're still looking for individual stocks and groups of stocks showing relative strength, so we buy the winners once the indexes find their footing. Here are the 10 stocks that we'll be covering in today's video. There's a lot of biotech stocks and a lot of renewable energy stocks. But as always, we can't spend too much time here because we got a lot of charts to go over. The first stock that we'll cover is AKRO. This is a biotech stock. Biotechs are the 7th strongest group in the market out of 197. So that's an A+ group strength rating. This is very much a technical play versus fundamentals. You can see this stock and many biotech stocks lack fundamentals, no earnings, no sales, no after-tax profit margins, so very much a technical setup. With this one, we had a very high volume move on the 13th of September, where volume came in 3,700% the average daily volume. So that is a game changer for the stock. Definitely something has changed within the demand for this stock. And we also closed high in the daily range, 85th percentile on that day. From there, you can see behind us, the market continued to drop. So this also pulled back into $25. The low of the day on the breakout day was $25.01. So we are respecting that nice round number of $25. If we go to a 30-minute chart, you can see how orderly this pullback has come. While it's still pretty large from $29 down to $25, remember the market was selling off very aggressively last week. So with this, if we continue to tighten up and pull back into $25, that would be an area to kind of manage risk against. The closer we can get to 25, the closer we can move our stop, or the tighter we can keep our stop just under 25 to limit our downside risk. But also, if we just break over 26, kind of the high from this consolidated area on Monday, Tuesday, something like that, that's also an area that I would be looking for AKRO. Sticking with the biotech theme, the next stock that we'll cover is CYTK. A+ group strength, we kind of covered that already. This has an A- accumulation distribution rating, meaning many of the heavy volume days are coming on up days, and many of the pullback days are coming on lighter volume, which is exactly what you want to see, right? You want to see people rushing in to buy the stock, and even when it pushes higher, only a few people are taking profits and selling on those weaker days. So good rating right there. Overall composite rating, 90. Individual relative strength rating, 97. Nice to see that combination of two 90s there. Also doesn't really have the fundamentals. Sales this last quarter was up over 1,000% year over year. So that's one thing to note, but profit margins are still negative, so we have a negative earnings per share. With this, we see pretty, very, very strong relative strength rating. You can see a nice uptrend there. So while the indexes kept pushing in lower highs and lower lows, this put in higher highs and higher lows. We did have the shakeout day on the 7th and a little bit on Friday as well, pulling back into the 21 EMA, but that got supported. We closed back above that range. I'll be looking for a break over 55 as a potential entry point. Now, this is a pretty high pivot. So with this move, I would rather buy like right at 55 and try to flip some into strength immediately, because the more clear in the pivot, and typically when you're buying at the highs in a bear market, you're going to get a lot of liquidity coming into that area, and you want to be selling at least a portion into that area to lock in profit. So if we're going to be buying at 55, we definitely want to be flipping some of it into strength right away to protect our downside risk for CYTK. Next, we have FLNC. Instead of biotech, this is in that energy alternative other group, 5th strongest group in the market, so A+ group strength rating. This has a B accumulation distribution, 53 overall composite, but a 95 individual relative strength rating. This is one that I've been watching for a couple weeks. I think this was on last week's Breakout Watchlist as well. And it tried to get going last week. We had a nice day on Wednesday, pushed higher on Thursday, actually broke over $20, but eventually closed near the low of the day. And then on Friday, we dipped even further down, about 5%. With this, I would like to be looking for a oops reversal entry on this, because I don't want to be buying at the high around 20. That's a little too extended. Where do I keep my stop loss there? Buying with a break over Friday's high, same type of deal, a little bit extended for a tighter stop loss, especially in this environment. I'm going for singles and doubles, not trying to hit for any home runs. The market environment is not on my side, right? So we got to be a little bit more creative with our entry point. So with this, I want to see if we gap under the low on Friday. Low was 17.95. So say we open at 17.50 on Monday. And then we rally and recapture the low of the day and the 21 EMA. The 21 EMA right now is 18.21. That's where I would want to start to put on exposure, and then use the low of the day on Monday as your stop loss, or just under the low as your stop loss. That way you get a tighter entry point. You're not buying extended, and this is a name in a group that has been showing relative strength. So that's FLNC. We're looking for an oops reversal entry. Back to the biotech stocks, very similar setup to AKRO. We have ISEE. We had a really nice volume move up, let's see, about twice the average daily volume, closed in the 93rd percentile, back above 15. A little consolidation day on lower volume than the breakout day, and then we pushed higher for 2 more days. We did break over 20, but like I said, buying into any clear skies, any breakout type areas, you're likely to see a little bit more volatility, and with the market kind of coming in as well, it makes sense that this pulled back and we're tightening up. On the daily candles, this doesn't look as clean, but we're still above the 8-day EMA. Volume is elevated, but you see on the pullback days are coming on lighter volume. Really, if we go to the 30-minute candle, you can see just how orderly this pullback was. As the market kind of found its footing last week for one day, it tried to rally, but eventually it fell to market pressure. Now what I like about this is we had this floor that was poorly drawn. We had this floor and we undercut it on Friday, so shaking out a lot of the weaker hands, a lot of the people that tried to buy the pullback, tried to buy kind of this pivot breakout, and it did not work. It immediately squatted, and then we got continued market weakness. So now all the weaker hands are really shaken out of this name. I shouldn't say all, but a good amount. All would be a break under the 8-day EMA here. But going back to that 30-minute chart, I do like that we shook out under the lows in the flag on market weakness. Now this could also be a bear flag and we break lower, but that's why we're going to be buying on strength. Let me do the temporary pen here. And just looking for a break over this downtrend, kind of lines up with $18. So maybe buy as it's coming over like 17. Let's see, what was this? High was 17.83, and then add spot is a buy over $18 for ISEE. We're sticking with biotechs and we're sticking with flag setups with KRTX. This had moved about 200% from $93 up to $278 in less than 6 weeks. From there, it pulled back about 20% from $280 down to, what was the low here? $233. Really not bad, especially given the market conditions. You can see the relative strength basically has gone flat, and after a 200% move, that's definitely something to note. We are trading below declining 8-day and kind of a flattening out 21 EMA right now. So this definitely could just continue to break down, but again, we're going to be buying on strength, not weakness. So the last 3 days have kind of seen their highs right around the same spot at 245, so 246.77, 245.02, 244. Right around that same spot. So I'm looking for a break over 245. That would also get us over the 8-day EMA and the 21 EMA. So look for a break over 245 as a potential entry spot, and then a stop under Friday's low, 236. Probably have to size this down a little bit unless you're going to be taking off a little bit into strength right away. That's how I like to trade these biotech stocks that have a lot of power to them, but I don't want to be hurt by them. So if it does immediately start going in my way, I'll take some profit on the way up, move my stop to break even, and take the risk out of the trade. So that's KRTX. Now we're going to a semiconductor stock, ON Semiconductors. That group in itself hasn't been super strong, 89th out of 197, but this stock is one that I've been watching all 2022, has been showing great relative strength, and you can see, I mean, this has continued to be in an uptrend. One of the few tech stocks that were making all-time highs just a couple weeks ago as the market rallied. And unfortunately, the market pulled back. This pulled back under $70, kind of the previous breakout area, but continues to show relative strength. Stocks in the group, GFS is another one that you should watch. WOLF, another semiconductor stock that's been showing relative strength. Not NVIDIA, not AMD. Those are the previous leaders. That's not something that we want to focus on right now. But with ON Semiconductors, very strong fundamentals, earnings per share up over 100% for the last 4 quarters, over 200% the previous 3. Sales up 30%, about 25% year over year. After-tax profit margins super strong, Fund ownership increasing quarter to quarter, and within the 31 stocks that make up the group, it's second on relative strength and number one overall composite. That adds a lot of probability to our trade. Now, without the M factor, the market, we're still fighting against the stream, right? So if the market can find its footing, this has been showing relative strength, and we have basically 3 days right around the same highs. I'll be looking for a break over Thursday's high, 69.49, call it 69.50 as a potential entry point. That would get us back over the 8-day and the 21 EMA as well for ON semiconductors. Next, we have ORA. This is an energy alternative other group, fifth strongest group out of 197. This has to do with geothermal energy, and this is a stock that my dad pointed out like 3 years ago. So Dad, if you're watching this, it's on the watch list now. Let's keep an eye on it. Group strength A+, accumulation distribution B+, overall composite rating 91, individual relative strength rating 96. Earnings have been negative, but sales are improving, and it's still in the right group. This had a really nice move from 66 to 98, so about a 33% run up there. From there, we pulled back into the 21 EMA. We did close under it twice, but not by much, and then immediately recover as the market conditions improved. You can see as the market rallied, this had that huge up day. For this stock, up 5.6%. It's not the fastest moving stock in the market, but it has been showing relative strength. It's in the right group, and it's flagging out and recently respecting the 21 EMA. So I'll be looking for a break over Friday's high here, 96.24 as a potential entry point for ORA. Last biotech stock that we'll talk about is REGN. Similar to the others, we had a really nice heavy volume move, up 520%, the volume was 520%, the average on the day that it was up 19% with a nice closing range over $700. We had a continued push the next day, but as you can see, we hit that high. The volume, the liquidity comes into the area, and people use that liquidity to sell off into also right around 750. So a pretty obvious point that liquidity is going to come into the stock, and people use that to sell off. Also, we had market pressure coming in, so it makes sense that we pulled back in. On Friday, the low of the day was 701.46. I would like to see a little bit more consolidation just above $700, maybe for the first half of the week, and then the second half of the week, this could take off, eventually breaking over Friday's high, 718.17 as a potential entry point there. Quickly going to the 30-minute chart, you can see just how quiet this stock has pulled back, even given the market conditions. So nice undercut of $700, pop back up, and now we're tightening through there. So that's REGN. Got two more stocks for you. The next one is Tesla, TSLA. I wanted to put this on because it was basically the only large cap or mega cap stock that's been showing great relative strength. Meta, Amazon, those continue to push lower, but Tesla, with that kind of alternative energy, electric vehicle theme to the market holding up right now, it's been working well. Back over all the key moving averages. The 200-day is in a decline, which isn't ideal, but price is holding up pretty well there. With this, let's go to a temporary line pen. You'd see a potential head and shoulders getting put in where the right shoulder is above the low of the left shoulder, so 233. The other one was a little bit higher, let's see, 266. So nice to see as we pull back, we're putting in a higher low than the left shoulder. And being above all the key moving averages as a mega cap name, like there's no other mega cap stocks that are looking this good. If we see continued market weakness next week, kind of pulling back into the 200-day and the 21 EMA would be a nice area to manage risk against. Otherwise, if we get market strength immediately, looking to manage my risk against $300 and the 8-day EMA, the low of the day on Friday at 295. So whatever entry point that you can get where you can reasonably manage your risk against that 295, just below 295 area for Tesla, TSLA. And the last stock that we'll cover today is VST. This is in utility electric power, 18th strongest group in the market. It has a C- accumulation distribution rating and a 63 overall composite because of the lack of fundamentals. But what really matters is price, and what's based on price is that relative strength rating of 94, something that I want to keep an eye on, also in the right group. I really like how this shook out under the 8 and the 21 EMAs on Friday and then rallied to close right at the high of the day. And the previous 2 days highs were right around the same spot. So we have a nice pivot to work with, 25.37, 25.40. So we're looking for a break over 25.40 as a potential entry point. And because the 8 and the 21 are so close together, we can use a stop under that as a potential stop loss there. So Friday's low was 24.87. That's a pretty tight stop and what I would be using for VST. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. Another big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the stocks, you could give it a try yourselves by using the link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on Twitter. It's @NickDrendel there. And on all the other social media platforms, it's @Nick_Drendel. Have a great week and I'll see you guys in the next video.